So, good morning, everyone. How's it going?
Henry, how's it going? Post-FOMC. Hopefully everyone's ready. Everyone survived the spike down and now the recovery. But we'll get into it.
Yeah,
Crazy, wild price action.
We have plenty of things to talk about. So yeah, hi Steve. Hi everyone. Guys, if you have any questions, write them down below in the chat. Subscribe, follow Purdia to get notifications once we go live. And let's not forget first things first, or risk disclosure. So don't take anything we're talking about for granted. Don't trust our opinions whatsoever. Do your own thinking, only trade on your own behalf. Do your own risk strategies and think for yourself. So it's we're just here for pure educational and entertainment purposes. Let's start the show. All right, Steve, so what do you think about yesterday's FOMC? Let's start with this one first. I see you have it open, so let's bring it up.
Yeah, the Forex factor here, you guys. And yeah, not much. We don't have the hot story. Of course, yeah, the hot story is always going to be the Iranian-US deal. And when it's going to be finally agreed upon, looks like it's extended by mutual agreement. So yeah, just still on pause there. But with post-FOMC, I think the whole story is defined in the charts. Let's look at the charts. Let's what do we see here, my friends? So I have, of course, my bias line, and the bias line is actually going to be the opening of the price of FOMC, and this actually lined up perfectly with the New York Open from yesterday. Doesn't always happen like this, but right around that range, we saw a sharp sell-off, recovery. The new Ched on the podium, Fed chair starts speaking, market sold off, and now pre-market, and this is crazy how, pre-market, it just slowly grinded all the way up. So whoever was trading the London Asian session was probably getting stopped out quite a bit, because naturally, if you cut this out completely, you're thinking, you know what, it's bearish. We're going to be closing more gaps below, even though we finally closed that famous gap that Henry and I talked about right around here on FOMC. This is no prediction, but we talked about it, how it was highly probable to close it. So what happened? We completely closed it right on FOMC with the increased volatility. People thinking, you know what, this is bearish. I'm going to keep shorting this. We grind it all the way back to the top. So I wouldn't be surprised if a lot of shorts are underwater, waiting for New York Open. But for today, and I can get into this later, my friends, purely based on price action, we are back into neutral territory from yesterday. So I draw out my neutral bias line, and that's the FOMC opening at 30,470. I can draw out the other levels later. But so far, this is what I'm seeing on the charts. What do you think, Henry? What are you seeing from the tape and from the news itself?
Yeah, let me quickly bring up a really nice summary from the Rabobank.
Well, from your eyes, what do you think with the recovery during the pre-market?
Oh yeah, I think it's a classical bear trap, right? But this is that's actually also one of our goals here, right? To make you aware, don't be trapped inside the intraday short-term picture. So always there's the old saying, if in trouble, zoom out, right? And so therefore, I always love to start my day with fresh eyes on the big picture. But before we go deeper, I think many traders are also completely underestimating the overall macro view of things like CPI print, FOMC, those kind of things like NFPs, right? Yeah. So basically, I think we need we need to understand that now after Powell, after 8 years, we have a new regime in place, a new chief, so to say. So he, from what I have heard and read, he will change many things along the way. I highlighted here some of the most important things. So basically, they're saying here that half of the FOMC participants expected to hike before the end of the year. So, and I think this is something to have in mind. It doesn't have any implications for the time being, but it's just something to be aware of, right? I think with this text in your back mind, you need to understand that the Wall Street will be watching the economic indicators much closely, right? Because if they know, even though it's not yet on the it's not yet seen on the print itself, like and not directly on the votes, but let alone that they have been like talking about it, or they're considering it, or that people have their opinions about if the economy goes down, they might raise hikes. There might be an implication to it on the longer time frames, right? So be aware of those kind of things. So over the next months, we will be watching much more closely the whole CPI, NFP, big numbers, right, that are coming out. And what else do we have? Yeah, so basically a vote 12-0. So nothing, no surprises here. But I think what I thought really interesting is, and this is here, that they have been also talking that he effectively terminated forward guidance. And this forward guidance, I don't know for how many years it has been in place. Like this forward guidance has been actually the single most important thing that all the traders across the world, big money players, have been watching and waiting for when for the FOMC meeting, right? So they have been waiting for this forward guidance, what they expect, and then the market behaved accordingly. So him kicking out the forward guidance now, it's a kind of a big deal. Might not seem like a big deal to newer traders, but if you have been in the game for a while and you have been trading and seen hundreds and hundreds of those meetings, then you understand it is actually a really big deal for the big money players. And what else? Yeah, so actually, might also be a super big change that they are now, he wants to establish real-time data indicators, right? Because this was actually also one of the biggest critiques on the Fed side of things, that people saw like, hey guys, you're like, we have all the tools you need in order to have to get real data, up-to-date data, right? And not being relying like on data from 2 months ago, 3 months ago, 6 months ago, and then always more or less like basically predicting it or guessing or making guesses and then changing them a couple of months later.
Yeah.
So yeah, he talks about this, that he wants to he also mentions here old-fashioned survey, right?
So are you saying, Henry, that no more insider trading then?
Nah, I think it's going to be. I think actually it's going to be easier for them, because now with real-time data, they will have all the numbers in advance, right?
Yeah,
so I think it's going to be actually easier for them. Yeah, and then just projections for the CPI, basically as always, right? CPI is temporary. So the inflation is temporary. It will go down here over the period of time and blah blah. So all those kind of things. Maybe one thing to say about Bloomberg. So yeah, it was signed, pre-scheduled, and as some of you might have remembered from yesterday when I've been talking about, guys, be careful of today, because it's a long weekend. Markets are closed officially on Friday. The signing originally supposed to happen tomorrow, but they basically signed it yesterday ahead of, and my thinking is it also has to do something with the markets, right? Because Trump loves the markets. He loves the markets.
Always.
He always does. Yes. And so now, closing the circle, we're coming back to NASDAQ, as Steve already started on our recovery story. And I think that's all. This is basically all there is to it, right? There were no surprises on the side of rate hikes, or basically stable situation. He didn't say anything wrong. It was everything was fine. So now it's basically a continuation of the upwards momentum, right?
Yeah. And just a quick side note, I just want to say, a few times he mentioned he wants to be more accountable, and this is always the word I hit when we're trading, prop firms, personal, anything. So if you guys ever want to dive in a little deeper into accountability, my newsletter's there, my information's there. Same with Henry's. This is what we always focus on with traders is accountability. And it's interesting how Warsh just kept mentioning that word. So yeah, sorry, Henry. Yeah, keep going. I just had to mention that because that was the key word he kept mentioning was accountability.
Yeah, I mean it's. I think accountability is, especially nowadays with social media and with all the thousands of people showcasing their P&L, is a big issue, right? Because nobody knows, is it for real, or do they blow through thousands of accounts and just showcase the couple of payouts they have? But nobody knows, so right? There's no proper accountability and no proper mechanism actually in place to to know who is for real and who is fake. It's actually, I mean, there's always an easy way to find out who is for real and who is fake, if you want to say. It's basically the less catchy and the more boring the topic appears to be, talking about risk management, talking about position sizing, talking about staying away from the markets, not overtrade, waiting for hours and hours for your setup to play out or for you to take the entry. I think this is actually the biggest sign of to separate the people who are just there for the audience, for the YouTube side of things, right? To collect the subs and the entertainment, and for the people who are like actual traders. But that's another topic for another time. All right, what do we have here? So we had our resistance becomes support, becomes resistance. So we still have our support area in place. It's still intact. We did not touch it yet. We I would say probably hit the 50% mark of our gap. So, but we were not able to close our huge upwards momentum gap. And yeah, it's a powerful correction. If you want to say it like from the candle side of things, I mean, I don't see any issue for the market in the current situation to continue climbing up higher, right? The risk from Iran and US war expanding as out of the way.
Yeah.
The SpaceX IPO has been super successful. OpenAI, Anthropic also planning their IPOs. So the story is in play, right? The narrative.
So Henry, quickly, is on my end, the gap is closed. Is this the regular trading hour chart or is this the electronic? Because on my end on NQ, the gap is closed, just to clarify, yeah. Just on the charts. Let's just clarify it live. Is this the, sorry, but is this the ETH chart or is this the...
Yeah, no, it's the one, it's the one that ends at 4 p.m. I think that's the issue we had the last time when I have been talking about a 500-point gap, and you have been talking about 200-point gap. I think this
let's talk about this live. This is the whole purpose of the live stream, my friends. Yeah, because I'm looking at my chart; it's completely closed, the gap.
Yeah, but look, my ends at 4 p.m. Eastern time. So like on Friday, last Friday.
Yeah.
The market closed at 4 p.m. Eastern. And what time did your chart close?
4:45 Eastern. Okay, so that's interesting because we're looking at the same NQ chart. But this is just very interesting. Yeah, I'm just looking right now. Same NQ chart. Mine closed 16:45. So 5 p.m. So mine closes 5 p.m. So I'm interesting.
I think the difference is here. Look, mine used to be like electronical trading hours. You're probably using here RTH, right?
No, I'm using the ETH
as well. Then I have no idea why.
That's why. Yeah, because we're both using TradingView.
I don't know, but I have always been using my whole life the chart, like the time that ends at 4 p.m. That's I don't know. I have been raised kind of been always using it for life.
No, because I'm looking at the 4 p.m. and the 4 p.m. Even the 4 p.m. gap got closed. So I thought it's just interesting, because I'm just wondering what the difference is between the two NQ charts, this is
No, but I mean, it's important. So we talk about the same
No,
thing.
it is important. Yeah.
Futures, CME.
Yeah, because mine's NQ1. Yeah, the futures is CME. So I'm just wondering, yeah. So like, is the gap closed or is the gap not closed? I'm just wondering if my chart is incorrect.
I mean, we can try. We can see CFD, Nasdaq 100, CFD.
Because I am on the futures chart.
Yeah, I happen to. Yeah. I just want to check on the CFD side of things.
Yeah, of course.
So guys, if you have an idea how this difference.
Yeah, let us know, you guys.
Yeah, look on the CFD side of things, it also has been closed, right?
Yeah.
Because this is Friday. So this was on the CFD side of things. This Friday closed and we closed the gap. So the question is really, why is...
Oh, I see why. Now I understand. It's because of the rollover. Here, let me and I know there was always a lot of questions with a lot of traders is with the rollover. Let me show you. So what I did is, do you see at the bottom right the B?
Yeah.
ADJ, like the adjustment. So because of the rollover, I always click this to close the gap on the rollover, and then it closes the gap here. So
okay, funny.
Okay. Yeah, so no, which is interesting because it's a feature on TradingView, and everyone uses TradingView. So yeah, you guys just pay attention here. So because of the rollover,
now it's okay. Now it's closed. Then yeah, I'm sorry, guys. So I basically misused. I usually always trade on NinjaTrader.
Yeah.
So therefore, I don't have those kind of issues. So I assume because NinjaTrader does it automatically.
It does it automatically. So, yeah. I was going to say.
I assumed that TradingView would do the same. Okay, good.
Yeah, so TradingView, you have to manually click that button, but once you click it, then every rollover in the futures market, it just automatically closes that gap on the rollover.
So why don't you just okay?
Because we always mention the gap, Henry. We're like, the gap is gonna close, it's gonna fill, and I'm looking at your chart. I'm like, oh no, like, is my chart incorrect? What's going on?
No. Okay, yeah, guys, sorry, that was a technical mistake on my side of things. So yeah, basically, but that's definitely changes the overall situation because now we have an even stronger push down, right? Because if you have such a strong sell off, basically into a major support area, and this gap was a major support area, then this V-shape return, like V-shape upwards momentum, is basically even more logical that it continues. So now we have this little resistance area here. Once we break above, we will most likely try to take out the ATH, right?
Yeah.
That sits right here.
Yeah, the Europeans are pushing it hard, Henry. Holy moly, the Europeans.
Let's see, not to DAX. DAX is not. Oh, what do you mean by the Europeans?
Sorry, I meant the European volume.
So yeah.
Pushing tech up.
Yeah. Okay, all right. But then all of my charts, I need to readjust them because now it's basically changes, right?
Yeah. I only knew about this feature about I think 7 months ago because I always felt, hey, it's different. Because when I went to like TradeAvate or NinjaTrader, it was much different than TradingView, and I was like, what is going on? And then I looked into it, and like one of the guys like posted a video about it. He said, yeah, and unfortunately, TradingView doesn't automatically close the rollover gap, so you have to. So it adds this feature in the bottom right. So
yeah, I mean, obviously TradingView, I always use it on the phone if I'm on the go just to quickly check the charts. But I just know in order for the stream, I got the premium version. So but yeah. Okay, good to know. We got this out of the way. Let's see. Okay, guys. So basically, NQ bullish, ES bullish, YM bullish. If you ask where the support area is coming from those highs, and basically you are sitting here, you can even make it a little bit down, 1 touch, 2 touch, overextended, 3 touch, 4 touch, and this aligns here with the gap. We did not close the gap, at least on my chart. Please confirm, Steve, just so we're on the same page. Like, what is Henry talking about? Like, there's not even a gap there. Yeah, no, but
Dow Jones never closed it. So possibly this could be a signal more downside because all indices usually close the gap together. So that's very interesting, actually.
All right.
There's a divergence there where, possibly Dow Jones closes in sometime in the future.
Yeah. I think, I mean, we had quite a rally, right? 5,000, 130, 50, 130. So we almost rallied for 2,600 points.
Yeah.
And I think this reaction, just taking some profits from some chips from the table, right? I think this is what it was, nothing more, nothing less. I mean, Russell's the same. It looks bullish. Overall looks bullish. Let's say we have the trend line here. So I would say if we break above, it's a bullish scenario, and then you still have this resistance areas here, right? Yeah. So, but if we're not able to break above and we stay below, might be a further down reaction. So just be aware of it, guys. It's that's the hard thing. This is what I don't like about all the analysts and guys always talking like there's 100% guarantee that the market does one thing, right? We don't know. It's always we don't know. It's always 50-50. We might push higher. We might bounce from here. We might bounce from here. We might bounce from here. We never know how far the market goes. It's just important to be aware of those levels and then watch also. Steve will talk about it later about the correlated markets and see which of them, how is the overall momentum, right? Inside the markets. And I think this is the important thing.
Yeah, the 100% is a complete illusion. Even 80-90%. Because why do you think there are those big firms called hedge funds? What is the definition of hedging? If one idea doesn't work, they have another position on the other side to protect them. So even the smartest analysts, algorithms, the top guys work for hedge funds because, if one idea doesn't work, they have another to protect themselves. So, that's why I just want to quickly just relay on that message with the whole 100%, 90% guarantee. There's no such thing.
Yeah, but I mean, it's all about clickbait, right? Yeah. People are pushing the narrative about I tested over 100 trades. This strategy, it has a 87% hit rate, and then I'm skipping through the video and I'm seeing all right, he missed to count this, he missed to count this setup. It's basically all of cherry picking, right? No, I would not have traded here, right? It's within a range. It's obviously within a range. I would not no. If you're backtesting a strategy, you need to make every trade count, and then either you have a filter that you for all of your setups, or you don't all right, gold. Basically, we came all the way up. We are not able to pass through the resistance area, and now we're bouncing off it. So nothing too fancy going on here. Still slightly stuck in between, right? Silver, same picture. Hit the resistance area. You see our level 71.50 has been intact, but we're not able to move above, and now going down. So range play. Actually, did you see oil? We had our correction here, back to our 78.50 level.
Now the question is, will it bounce, or is it just going to slice through? That's the question.
No idea.
But we finally got it though. No, you're right. Yeah, we got the break. Now we're I wouldn't say we're holding support, but we're still at support.
Look, no, but this is what I mean. The market always comes back to the levels. Therefore, I'm a big fan of those line in the sands. Yeah. And then you just need to be patient enough and wait for a couple of days. And the markets usually always comes back because there's liquidity sitting there. There's always liquidity sitting around those areas. But most people, they're just jumping in, FOMO, and don't wait, right? But if you're waiting, if you're sitting on the hands, then you can get a really nice, and you see the wick, it shows it, right? Yeah. The wick shows you the pace of the market, that it was actually hammered down with liquidity, so it was not able to go up. And it's I think
the macro events are lining up because the peace deal, nothing official yet, but oil in the markets usually are forward looking and they know what's going on. So if oil is selling off and it's below 80, close to below 75 actually, then we all know what's coming in the near term in the future. So oil usually shows the first crystal ball idea in the future.
Continuation of a plump, right? Yesterday, shooting up, but still on the downside. Triple Qs. It is going to be actually quite amazing, because if we are closing above, it's going to be really nasty, because it's like completely overlap, right? Completely reversal of yesterday. And if we close today above 744, so like above this area, if we are really managing like to push another 1% higher and to close above, then this is going to be a super, super strong signal for the next week. We can actually take a look at the weekly chart. Yeah, because then the candle will be super strong to the upside. And look, this doji here, it's really like such a powerful momentum bullish doji. So yeah, if we manage to close above 744, then we're gonna like pure candlestick analysis, right? Then technically this should have enough power for the next week, in order to push higher.
Next level,
And actually, look at this. We are also talked about it a couple of days ago. That we are. I'm sorry, guys. I have to delete this. We also talked about a couple of days ago about our projection here, right? So we talked about our projection. So if we are closing above 744, 748, then it might be that our bullish pattern here plays out, and then it's going to be like a bullish pattern, right, to the upside, pattern breakout to the upside. And then there's just one thing that's missing, and that's going to be OpenAI announces IPO, Anthropic announces its IPO, Anthropic kind of, I don't know, like negotiates a deal with the US government, and they now move like on the fast lane to the IPO. It's all it needs, right? It's like always the market always aligns technicals with news, and I mean, it has always been, always will be the case. Why? Because some people know people who know people who know things, and those people pass them along, right? And,
so we're gonna have another Meg company. It's gonna be Meg 9, Meg 10. A couple of AI companies are going.
I think actually, yeah. I think actually. I mean, Meg 7 has been quite a name, right? But not why not like the Crazy 10 or something?
Crazy. I like that.
Something like that. No, because look, we had the Meg 7 right now with the SpaceX, OpenAI, and Anthropic. There's going to be 10. So now the question is, do you kick out the weakest ones? I mean, they could always get rid of Tesla, right? Because by the end of the day, all the focus.
But also Meta is not even part of the Meg 7 anymore. I saw Meta has been losing out, and they're like 8th or 9th place because Broadcom has moved up. But anyways, it's just interesting.
Oh, really? Is Mega so weak in terms of?
Yeah, Meta has been weak. It's like Broadcom is ahead of it. I think Tesla's just behind it too. But yeah, Meta dropped out of the list too.
Meta, I'm always feeling a bit sorry about Meta, right? Because it has like one of the biggest. So it's like it's the social media platform, and it will always has its power. But once it's in a negative, people are really hitting hard on it. Even though you cannot take away the power from Meta, like you cannot just replicate it. People are trapped inside WhatsApp, Instagram, and Facebook. No chance.
And Meta actually tried to buy out Twitter a long time ago. I think like 15 years ago, I saw a story where the owner of Twitter, they offered like at the time, $500 million when it was still a small company, and the owner of Twitter said no. So imagine if Meta or Facebook owned Twitter at the time.
I mean, look, actually, as crazy as it looks, but it actually looks like a bullish triangle.
Yeah, it's a big one.
So it's a big one though. So but I mean, hey, didn't Trump said like last year or something? Dow 100,000.
He did say it.
By the end of his
term, yeah.
By his term.
Yeah, we got 2 years.
So actually, I mean, it might be. It's like another 100%. So who knows? Who knows? Everything is possible, right? So yeah, but it's always like a big picture talk. Let's bounce back to SpaceX. Yeah, big topic of today. I put it in the titles: correction and hype is over? ? Actually, we had a market opened opened.
Yeah,
right
market
1 minute
open. Yeah,
ago.
about a minute ago. Yeah, sorry, Henry, for that.
Yeah, no worries. I need to figure out a way how I can like have it on a timer on a chart if it's possible. So let's see. Market Nasdaq popping up, ES going up, Dow going up, Russell's approaching its trend line. Actually, almost approached its trend line for a minor reaction there. Let's SpaceX. So yeah, SpaceX super interesting because there's this unofficial official rules that over 10% you're in a correction territory, right? So now the question is this a pure correction, or is this like the hype train has been overextended? And because I have seen on social media actually that many people have been taking plenty of big size bets on the option market against like on the short against the further right, right? So on the short side of things. So and as always, I have also some people I know from earlier, they have been long, and they're like, yeah, how far will it go? 300, 500, like they were in full GameStop mania mode, right? Yeah, it's gonna pop up forever. I was like, guys, the company is valued at 2 trillion. It's not like GameStop looking at 50 billion or 100 billion evaluation. We're looking at a $2 trillion evaluation company. So yeah, we closed the gap. That's the important thing, right? We close the gap. We are gapping down below. So obviously the first correction territory will be our resistance area here, this greenish one. So if it goes up, you might see this. But if we are managing to break above, be aware of a possible reaction from this gap up territory here, because it's a resistance. So what you want to see is going upwards, bouncing back, going higher. And I mean, it's a $2 trillion company now, right? So it might have overall implication also on NASDAQ. So let's see, maybe not if it goes down for 1, 2, 3%, but if it really collapses 10% or something, then this might have an overall impact on NQ as a whole, because many people might do some conclusions like, oh, right, maybe the whole tech sector is overhyped, overvalued, whatsoever, and then we might see a reaction. But for the time being, NQ is going up. Yeah, we have our level. It's, let's say, 30, I would say it's 3,600. Let's write it down. So if we manage to close above, I think it's a bullish case, in my opinion. So what I would like to see here is closing above, consolidating, moving higher, right? Something like this. Then I think at this point, it's a bullish case. But if we are falling below, let's say 3,500, then I would say this would be like the line in the sand for me for a bearish case. So this is how I would play it. Bullish, bearish, again, pure analysis. There are many ways to enter it, so do your own thinking. But if this is not able to pass the barrier, it's a resistance area, then we might see a correction to the downside below. So just be aware. And I always, like in my personal view, over the years, I always love to see a reaction first and not making a prediction. So I always love the market to play out first and wait for confirmation to get the odds on my side, to get a better edge. And I rather have a smaller risk-reward ratio with a bigger stop loss than many small cuts and then being because it happened to me when I've been trading early in my career. I had the right idea, but I completely mismanaged the trade itself, right? So I jumped into early, losing 10 points, 15 points, 12 points. And then by the end of the day, the market went my way, but I hit my daily risk. And so if I would have just taken like a big stop, 50 points, 60 points, 70 points, and gave the market proper space to play out, then I would have been on the right side of things, because the idea itself has been legit. But yeah, so always do your own thinking and backtest some stuff. All right, I think we had our overview, and I give it to you, Steve.
Yeah,
guys, I'm sorry. If you have any questions, let us know. Write them down below. We can always answer those. And yeah,
you guys, never feel alone, feel afraid, speak out, let's chat. Majority of traders are alone on the journey, so that's why we're doing these streams. Purdia also has a community on Discord to reach out to the team members, so never be afraid. Yeah, so currently right now we're retesting the FOMC line. No surprise there, NASDAQ. And Henry was mentioning the sell-off on SpaceX. Yeah, we're down over 5% on SpaceX, and NASDAQ is feeling the pain as well. So no.
That's what I said, right? That it might just drag down the whole tech sector.
Yeah, exactly. Yeah. And then this is also why I have like Russell 2000. Russell 2000 is not affected about these big tech names. Still have a similar reaction, but not as big. So first place, the strongest currently right now, just for now, of course, things can change later on, is Russell 2000. NQ is second, up about 1.5%, and I'll just continue to the ratios later. ES and then YM. YM is the weakest today, and we were mentioning how Dow Jones still has not closed its gap just yet. But yeah, now we're seeing a bit of a sell-off on NASDAQ, close to, yeah, volatility is high, close to 170 points. 170 points in about, yeah, less than 10 minutes. So it's not a small sell-off. So was this rise during pre-market a bit of a fake out for lower prices? Because remember, the big players, they always want the best prices to sell. They are not selling at the bottom. They're selling at strong liquidity zones. And where was the strongest liquidity zone yesterday? It was at
let me guess, market open.
Market open, of course. Where was this? Right around 30,500. Boom, we hit it. And also the FOMC opening print, a lot of volume dived into that as well. And now we are getting hit. So let's look at targets to the downside and the upside. Just look at important levels. And what I'm going to do is I'm going to mark up the opening print on Tuesday. This was right around 30,800. Mark this out. Measured move all the way down to the FOMC level. And what do we get to the downside? What's the potential downside risk? So yeah, it's not even taking out the lows from FOMC, which is no surprise because there's a lot of volatility. You cannot, I thought about lighting up the measured move from FOMC, but because it was such an extreme day, it would not seem realistic to measure it from there. So what am I looking for on the possible downside is 30,100. This is also one of the lows from FOMC, but not the entire push down. But yeah, this is good enough for me. So let's just measure out these levels on the chart just to paint a bigger picture. Intraday, it's still an intraday picture, but partially zoomed out just to focus our minds on potential setups, where price could go. And if NASDAQ continues below this price, I'm looking for weak short entries only, but not so much on NASDAQ. I would actually be looking at it on ES or Dow Jones since they are the weakest pairs on my ratio. But always keep NASDAQ on my charts since things could flip for some reason, like Dow Jones or ES could be finding support, lagging behind while NASDAQ keeps sliding down. So I'll readjust the list. This is how I look at markets. I also do a zoomed in picture, which is, a little recap I'm going to be doing later on the streams, which I feel like is important because, I will need to be showcasing the Purdia accounts, but that's coming in time. So let's see what happens here with the asset rotation. This is what I call the real imbalance in markets. The real spread is not in fiat, but in asset rotation. So this gives me real conviction, cuts out the noise. It helps me out with what the plan is next. And also, I just want to quickly look at Forex Factory, Henry, because I know there was some news today. We had unemployment claims. It was a slight increase, still showing strong resilience, low layoffs, steady hiring pace. So on the macro end, still bullish case with the news that we got pre-market, and no surprise that we saw a bit of a rise. Close to, how many points was it? It was about, we saw about like 100-point rise. But this also lines up with my FOMC pivot. So everything just lined up today. With the New York Open from the previous day, FOMC print, no rates were changed. but lots of volume came into the market as well as today's economics. So it's funny how all of these economic news lines up at a similar price level, still be labeled as FOMC because that's that's the one impulse name that's on everyone's mind, and that's the trend. But now that we're seeing a retest, I wouldn't say a break. It's still just retesting. If you zoom in on the 5 minute, yeah, we're still hanging around now. But very early in markets, I'm not rushing into any ideas. So far, NASDAQ is holding, and if NASDAQ is able to hold and keep number one on the list, or not even now number two on the list with the strongest indice, then it wouldn't be surprised if we continue to the next level and find ourselves at 30,800. Currently, right now, we're getting a retest. Still no confirmation. I'm not entering blindly. Only time I place limit orders, because yes, I do place limit orders, but that's after I place my first entry model. So let's say, we get the confirmation, price is strong, it's holding up. I look at volume. I look for the first candle closure for the daily range. And then I set limit orders right around, like the 50% level. Let's just call it the 50%. So if market comes down, retest, I get a better price entry, but I always keep my risk level the same. So if my risk invalidation level is down below here, for example, 30,436, I measure it, including my limit order down below to get a better price entry. However, if price never comes down and just keeps floating higher, then that's fine. Then wherever my target is up above, I start taking profit. Sure, I didn't get my extra bid in, but I'm fine with it. Because a lot of times if market moves quickly into one direction, it's going to keep going a lot stronger in that direction. So which is why I take off my limit order and I just start taking profits. However, if it comes back down, retests it, consolidates, then I'm a lot quicker to take profit by usually the same amount of, but my target, in percentage points is very similar. So that's just one idea that I do.
What do you think? How many times per month does it happen?
It's about 50-50 because the market, it loves to retest, whether the long side, short side, but I did find on the long side, it likes to retest a lot more. It likes to, come down to 50%, consolidate, and then continue higher.
Yeah, maybe one thing for people to understand what actually happens there is, let me quickly. Basically, if you want to see, we are in a range, right? You can see it in a picture. And if we are staying within this range, so underneath this resistance area, and we're somewhere here, the market has all its, he can jump all over the place, right? It can basically reverse at any point. It can reverse here, it can go to there, it doesn't matter. So therefore, the big money players, the smart players, they wait for the market to go to the extremes. Because at the extremes, look, if he breaks above this area, right? It's as I showcase as the 5600. If he breaks above 5600, it's basically like a free highway, right? There's nothing there. So in comparison to here, look, like 1, 2, 3, anything can happen. But above, it's completely free. And if it's free, then the market is also much more likely to have an easier ride to the upside with a much clearer picture than in comparison if it's sitting in a range. And I think this was also a super huge misconception of many people, that they don't wait for the market to show its hands. What does it want to do? Is it stay in the range mode, or because we can easily be sitting around here and doing nothing. So let me show you one thing.
It's also classic human nature to rush in and not wait for confirmation.
Yeah, look, for example, you're saying, oh, all right, it's a 15-minute candle, right? You're saying all right, I go long here, and you're long. Okay, you have your stop somewhere here, you have your stop somewhere here. But the market doesn't care, because this here is range territory. So the market, and you have small support area here, you have this support area here. The market can also drop down below. So you don't know. And basically you give the market not enough time to show its hand. And it's like a pre-flop in poker where you just go all in. but you always want to wait, right? You always want to wait, or at least don't commit yourself. So if you trade usually with 3 contracts, then don't go long with all 3 here, right? Just make it smaller. Go like take 2 contracts, or even better 1 contract, and then wait for the market for more confirmation. And then you can still re-enter if the market goes above, and then you can still I'm sorry, wait.
And you're talking micros, right? Not minis.
Yeah, micros. Yeah, I'm sorry. I'm sorry if I was confused.
Not minis, Henry. Never minis.
Yeah. I'm sorry. Yeah, micros are actually not so old, right? So it's they just came along a couple of years ago.
Yeah.
I think it's a good development that actually it goes in both ways, right? At the same time, it's good for people that they are much more able to manage risk. But in the same time, I have the feeling that it also attracted a gambling audience into the markets that are basically just fooling around and don't take trading seriously, right? So yeah, but back to the topic. So if you go along here and you don't give the market enough time to show its hand, then you need to reduce your size. And then if the market goes along and it gives you a clear signal gives you a clear signal that it's a bullish upwards movement, then you still can re-enter your remaining position, and then your average price just goes down, but then you have also a much higher confirmation. It's basically always this balance, higher hitting rate versus risk, right? And I think this is what many people need to understand, that they work in both directions. So yeah, this is just something I wanted to add.
Yeah, like it's all about pre-planning, knowing your invalidation level, knowing your risk size, and also knowing where you will start taking profit. This all has to be pre-planned before you take the trade. You cannot be blind with your risk, with your take profit, and you'd be surprised how many traders are blind on both ends, where they don't know where they're taking it off and they don't know where they're taking profit. Like for me, everything's preset for me on the risk side with my limit order, at a better entry. If it goes down, my risk level, where I'm all out. And then also I said what I do is where places where it'd be interesting to take profit, where I'm like, okay, if it lands in this area, I'm starting to chip away at my micros. But I set an alert there. I don't set limit orders there, because sometimes we have these huge spikes where I can make a lot more money or a lot more profit, or if it's trending, we see a big announcement. And I've seen this before, because in the past, yes, I put market orders there, or in my TP areas, but I did the back testing, and so many times when I'm in the trending position, we get a strong headline where I could have made a lot more money. So instead of putting a limit order to sell there, I just put an alert, just so I'm alerted on my phone, because I turn off my chart setting. Once I'm in the trade, I turn it off, because naturally the market way it moves, it can mess with me. Where I'm like, oh, maybe I should add a little more, or maybe I should take some out, or I don't know how I feel about this. No, once I did my analysis, I'm in the trade. My mind goes crazy, because I look at ES or Russell 2000, and I'm like, oh, but these guys are they're like hanging fruit, or they're not moving as strongly as NASDAQ. I turn it off. I set my alerts. If I get the alert on my phone, then I go back on the charts, and then I manage my position. I'm like, okay, should I start taking profit there, or can it go higher? But usually if I get the alert and like price just stops there, my first TP, then I'm like, okay, I'm going to start taking profit. But if it spikes way above, then I start trailing, because the impulse is so big.
Yeah, but I think this is the big difference what people need to understand, right? Because everything you described is you have a clear back-tested strategy, and your strategy dictates where you take profits, when you trail your stop, how you behave, and all the signals and further along. Yeah. Most of the things I see, and also from hundreds and hundreds, thousands of traders I've been spoken to, it's only about the setup. It's only about the initial entry, but it's not like it's just the top of the iceberg, right? It's not even like the whole iceberg that is over the water. It's basically just the top cherry on the iceberg. It's the entry itself, but it means nothing. I used to trade with some guys, and we were short on the same position. I stayed in the trade for hours. They went out of the trade after 1 minute. Why? Because their target has been like 15 ticks, 20 ticks, and I've been sitting there because my target has been like 100 points or something, right? And so even though you talk about the same level, the biggest misconception is always to assume that everyone trades the same way, because they have been risking maybe 4 ticks and I have been risking 30 ticks. So I had a risk-reward ratio 3-to-1. They also had a risk-reward ratio 3-to-1, but the whole time horizon and everything was completely different, right? I've been talking about the 15-minute chart, 5-minute chart, and they've been talking about the 20-second chart, range chart, tick chart, all kind of like on a small time frame, right? Like hyperscale.
Hyper, yeah. 20-second chart. Ooh, that sounds scary.
Yeah, no, it works, but you need to be super disciplined, and you cannot use it all the time, right? It really works well during high volatility events like news, opens, those kind of things. Then it works really, really nice, good. But you need to be disciplined in order for those kind of things to work. And I think that, yeah, if people come in, tune in more often, they will what we're talking about in much more detail. So therefore, guys, if you didn't subscribe yet to the channel, subscribe, follow us on social media if you want to learn more. Steve has also a free email weekly newsletter. I am also about to start posting more content due to the business side of things. I didn't have time yet, but it will change soon. So therefore, tune in and come back. If you have any questions, comments down below, and we're happy to help and answer. And so, yeah, basically now on NQ side of things, this is the confirmation we have been talking about, right? So now we want the market basically to show us its hand to see, is this a proper continuation pattern, or is it just a one candle kind of correction and then it goes its way? But this is what we want to see. And it's I have the feeling people are always thinking like, oh no, I missed the move. And like, yeah, so what? The market moves the whole day. The market moves, like, gives you dozens of opportunities, and it also always gives you the second chance, a third chance. You just need to be patient and wait, right? And yeah, it's exactly. At least from a personal opinion how I see things. So.
Yeah, market moves in zigzags. It doesn't always just go straight up, straight down. Even if it goes straight down for the first few hours, eventually you're going to catch another re-entry on the bear side.
I think like it's human nature, right? And sometimes it's really painful if you have missed one trade and you have it was just a clear break and the market moves 150 points like in 3 minutes, and you're like, oh gosh, if I would have been on the train at like easy profits, easy ride. But people forget that those trades only happens like once, one trade in 50, one trade in 100, one trade in 200 trades, right? And this is so like it's completely misaligned in terms of its they overvalue the easy opportunities in comparison to the grinding side of things. And I think many more people need to understand that trading is all about consistency, and consistency means grind. That means basically if you are a sports athlete, to train every day, to be prepared every day, to do your homework every day. And we don't have the luxury to have one game per week or 2 games per week. And trading, it's basically 8-10 hours per day, depending on your trading style, and then like 5 times per week, right? Whereas game time, we need to be prepared, focused, and clear-minded.
Yeah, and like embrace what the market is offering you for that day, and also embrace that the opportunities will be different every day as well. Too many people are stuck on those setups where they think it's going to be the same result every day. And that's the issue. So, measure out the average true range, measure out, let's say, for example, right now, the current range on the first 50 minutes is about 180 points. And if your bias is, okay, this is a break retest, I'm sticking with the 180 points, that's my measured move, then stick with that. Whether it's, first 50 minutes, the first 30 minutes, or you're looking for entries after the hourly close, which is coming in about 5 minutes, because we can see the market shifts a little bit after the hourly close. After all the news is done, we look at Forex Factory. Everything's done for the day. Nothing else later on, unless you're a natural gas, oil and gas trader. Of course, we're always keeping an eye on any sudden movements sudden headlines that could shift momentum. But so far,
we really need a API connection to Truth Social, like an instant. Actually, I swear, I think this will be like a great business proposition to Trump. Like, hey, you should charge $100,000 that you get like a financial juice, right? Like real-time notifications instead of a delayed one. And I swear
Yeah, because like whenever I look at financial juice, it's always delayed. I don't because once we get that quick reaction, I gotta wait a few minutes. People are waiting unless you have.
I tell you, I think it's going to be like it would be easy money for Trump. Just charge $1,000, charge $10,000 per API just to get them in instantly the notification.
Yeah, Truth Social Terminal. Yeah.
Like imagine like a Bloomberg terminal. Like no, just all the tweets, and all the gossip.
I saw a number where the owner of Bloomberg, he's up there one of the richest men in the world, which is crazy. Yeah, I didn't fathom that he was.
Yeah, I mean
that big in the ranking there.
Obviously, Bloomberg got more and more expensive over time, right? They started in the 80s, I think it was 80s, 90s, 80s, and back then nothing like those things existed, right? And the margins, the profits, the banks, the hedge funds, all the companies were making were so huge, so everyone had a Bloomberg terminal, and they're just happily paying. Now you have like one Bloomberg per terminal. Usually people are sharing those in a team, or a couple of guys sharing those. But yeah, it's printing money, but it's changing. There are already some open source alternatives. I think it's just a matter of years that the whole structure will change, because it's way too expensive for what it is, right?
Yeah. Is it 20,000 or 25,000 a year now, I think?
I think it goes up to 60, 70, depending on the different packages. All kind of data, with all kind of different data and stuff like that. So it's really super expensive. And then you also usually, if you have Bloomberg, you also need to have Reuters. It's also additional couple of grand on top. So you really like, and it's like just information, right? It doesn't trade. It's not like generating profit by itself. So yeah, right. And you see, guys, let's we can see it on Steve's chart. So we basically were not able to follow through, right? And if you're a scalper, you could have made a couple of points. Oh, actually, it's really, really well. 150 points, 140 points.
Yeah, big expansion on volatility, 150 points, yeah.
So yeah, and I think in a couple of weeks, we will start also to trading some accounts here, just to showcase you how you could approach things. I'm also currently working on a couple of tools that you could use. And yeah, let's see. All right, guys, if you have any questions, write them down below. Otherwise, follow, subscribe. Links down the subscription, the links in the description down below. Otherwise, everyone, happy trading. Think for yourself. Don't blindly follow anyone on social media who pretends to be a profitable trader. And I think it's good actually that from time to time some stories are coming up that people also experience, that many of the self-proclaimed gurus actually had thousands and thousands of accounts that they blew through and just showcased.
They need to be aware of what's really going on.
So yeah, tomorrow is a day off. So see everyone on Monday freshly at 9 a.m. Eastern time. So have a good one. Wish everyone happy weekend. Trade safe. Do your own thinking and talk soon.
Yeah, thank you, everyone.